Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about a simple strategy that is mostly traded in the London session. Some call this the European session. All parameters and setups will be fully explained so make sure to watch up to the end of this video to fully understand. Be sure to be part of our Free Signals Telegram channel. I'll leave the link in the description box below. If you are meeting us for the first time, hit that subscribe button and check the notification bell icon so that you won't miss any of our quality content that we upload every time. So the first question is, why trade the London session? London session usually sets the daily trend. Is this day going to be upside? Is this day going to be downside? That is usually done in the London session. Then due to more trading volume, all majors can be traded at very slim spreads. You'd see that the Asian session offers very high spreads because there is less trading volume. About 43% of all trading transactions are done in this particular session. Therefore, make sure you learn this strategy to take your share within the London session. Here's the strategy definition. This strategy employs a technique used by market makers to trap traders. Trapping traders is basically a process of convincing traders to take positions that are going to hold them for a long period of time, probably to wipe out their account or to clear out their stop losses. Usually price bounds on key levels. Key levels is actually a very common topic in the traditional way of trading. So almost everyone looks to sell at resistances and looks to buy at support points. So these key levels are points that convince traders to take positions. Market makers use this hype to take off all open positions by issuing stop hands. The stop hands are funny. If you see them on the markets, you actually learn how this is going to come. So here are the strategy parameters. We need to see the market in the second level of the M15 cycle. So we are saying, or if you have been following us, we trade the institutional market maker method where we count levels. We have levels, 3 levels to complete a cycle. So we are saying in this second level, that is where we are actually going to make use for this particular London session strategy. So the Asian session is a session that is a consolidative session. It sets the high and the low, actually the initial high and the initial low of the day. Our entries will be after candlestick reversal pattern at Asia's low, which is basically an initial daily low as illustrated below. So here's the illustration so that you fully understand where we are coming from. We are saying we actually use this particular strategy in the second level of the M15 cycle. This is level 1, this is level 2, level 3. So when we see that we are now in the Asian session of the second level, we actually start to look for this particular pattern. In this case, you can see at the Asia's high, that is where people are convinced that this is going to probably become an M, or this is probably keep on going down. So we call this an induction move to the opposite side. They will intend to take for that particular day. So for this particular strategy, you are looking to get a candlestick reversal pattern at the low of the Asian session. Your stop loss will be 25 pips on the downside in this particular context, and your take profit will be 50 pips on the upside. So let's now have market examples to fully understand. To memorize the strategy, it's going to be M15 second level, Asia sets initial high and low of day, enter at candlestick reversal pattern at Asia initial low. This is for upward market context. If it is downward market context, we are saying enter at Asia initial high. So here is an example on EURUSD, snipped from the 6th of March 2023. You can as well go back in history and see this on real markets. We actually had level 1. After level 1, we actually were waiting for level 2, and level 2 is a point where we are looking to trade off Asia's low. For this particular context, we are going upwards, so the Asia sets the high, the initial high and initial low of the day. At this point, the market actually made an inducement to the downside, and at this candlestick reversal pattern, which is a bullish engulfing pattern, was issued. 25 pips below, 50 pips a target, and you are done for the day. Another example actually picked from the Euro US again on the 21st of March 2023. We can see level 1. After level 1, we were now expecting level 2, and in this particular case, Asia sets the high and the low of the day, and the market actually come to the low of the Asia session slow. Then a candlestick reversal pattern was issued, entry, then target 50 pips, your stop loss below with 25 pips. So it's basically looking for these patterns in the second level of the M15 cycle. As I always say, you should backtest each and every strategy before you apply it with real money. I always say Forex is a system designed by smart people to transfer wealth from the impatient to the patient. So always be on the right side. We have a daily Zoom market analysis that goes for $50 per month that can help you analyze the market, where I actually give you a daily watch list to stalk and follow for the particular trading day. On that note, we come to the end of this video. Thank you for watching and see you on the next one.